And traders at Access Bank say that they expect minimal activities in the market as investors turn their attention to the 211 billion naira treasury bill auction. Tobechukwu Ikpe, a Treasury Team Member at Access Bank, joins me now as we look at sentiments driving the market activity today. Thank you so much for your time, Tobechukwu, and let's get to your thoughts on the auction today.
Okay, thank you for having me. For the auction today, we expect to see some active participation at this auction, given the level of rates that the last auction closed at. The previous auction closed at 16.75 because of some over-allotments by the DMO, and the policy stance has been interesting the market because they feel like the rates are at attractive levels. So we expect robust participation at this auction from market players.
But in terms of how the market first has played out this week, with midweek today, I'd like to get your thoughts around how we've seen different segments of the market pivot or position ahead of this auction.
So this week we saw the week open with bullish sentiment on the bond space, and that was largely due to the attractive level of risk there. Some buyers in the market felt comfortable taking positions at sub 18%, at 17.9, 17.8 for the 30-year bond. And we saw that bond rally yesterday and on Monday. Today, the market has been kind of quiet because of the NTB auction. And the bills market also, we've seen some interest on short-dated papers and the long-dated securities. We've seen those trade around 14.5 for the November, last issued November NTB. For the money market, we saw rates there remain elevated due to the market being in a repo. Banks have been largely funding from the CBN to meet their obligations. So today we expect that those rates in the money market will trade around 25%.
Yeah, but when you look at the market, though, in terms of your outlook for liquidity, are we expecting some maturities down the line? And also, how do you see that impacting the interbank market rates going forward?
So we expect the interbank market rate to remain elevated for the rest of this week. This is due to the NTB auction settlement that will happen tomorrow after the auction results today. Some market players feel that the DMO will oversell at this auction again, which would be a net debit from the system, given the market is currently in a repo. So we expect the rates to remain at high 20% levels. There's also no significant inflow to the system. There's a coupon payment today and a more maturity today, but that would not be enough to fill the gap, funding gap for banks. Yeah, so going towards the end of the week, we see the rate remaining at the close to 30% levels. And by next week, we expect that to moderate further as FAC inflows start to come in.
But let's look at the FX space now. In terms of activity, we're looking at the NAFEM market. What are the trends showing and your expectations going to next week?
For the FX space, what we saw this week, yesterday, the CBN continued the assessment of the FX backlog, but we've not seen much traction in terms of the rates. Reaction in the market in terms of the rates that market players are seeing. Most of the trades continue to happen between 800 to 900 levels, although it traded as high as 1,100. Since the liberalization, we've seen improved turnover, but the demand still far outweighs the available supply in the markets for the FX space. And the demand is increasing as the year approaches its close, as market players, customers and users of FX want to clear out their FX obligations, their credit lines, so that in preparation for next year. So we continue to see that demand continue to build up in the FX space and waiting on the CBN for more clarity on where the supply will come from. Although they've assured us that they have a line of sight on some funding over $10 billion, market players have not seen that supply coming yet. I think they are still focusing on clearing the backlogs that were created in the past, so which they did yesterday. They provided about $90 million to clear the outstanding backlogs.
All right.
So for the FX markets in the near term, we expect that these stalemates will continue and just a few trades, bilateral trades happening in the market for those that can secure their FX.
Yeah, we're definitely keeping a keen eye on that space, and we'll look at how things continue to develop there. Tobechukwu Ikpe, there's a Treasury Team Member at Access Bank.